In this chapter, we get a glimpse into the future in the top 3 trends in banking, moderated by Ben Snowman, VP of Partnerships and Advisory at Mambu. Ben, over to you.
Hi, everyone, and welcome to this Mambu chapter. Today, we're going to take a glimpse into the future. 4 decades after the launch of the internet, we're now in an age of constant connectivity and digital ubiquity. Consumers now expect personalized, contextualized, and seamless experiences. Now, Bain Capital Ventures expect that, say, the embedded finance market will be worth more than $7 trillion in the next 10 years, which is twice the size of the world's top 30 banks. And so we've got a great panel here today to talk about some of these trends and themes that the industry will face over the next, say, decade. We have Philipp, who's a partner at Bain in the financial services practice. We have Jörg, who's the CPO of Solaris Bank. And we have Kunal, who's the regional director for advisory services for EMEA at Mambu. So my first question, Philipp, let me ask you first of all, what do you see as being the main trends that the financial services industry will face over, say, the next decade?
Yeah, Ben, I think there are probably 3 things that come to mind. One of the key trends that we see also with our clients is increasing focus on data. And why is that? I think that ties to the second trend, which is customer centricity. It's not really something new, but those things combined, I think, will make a big difference. And the third one, of course, is the fundamental change in the technology platforms that people are using. So as in the software arena, a lot of the providers are shifting to software as a service. We see the same transition also happening in financial services. And if you take all of these things together, I think you will get something that is very close to embedded finance. It's really breaking up the industry boundaries. It's taking us to a place where there is a fabric and infrastructure, very API rich, that connects many different services that go beyond the things that we normally would associate with financial services. Some people say it's invisible, but you could also argue that the exact opposite is the case. We're taking something that was disconnected from many of the customer needs and bring it to the center of what the customer does, but just in different areas of their personal lives, be it mobility, telecommunications, or shopping online.
So that's a great point. And so maybe, Jörg, we could come to you from the perspective of Solaris Bank. Philipp, you were talking about, this notion of as a service and, the sort of the bleeding of financial services into other verticals, say, and Solaris Bank is one of the leading banking as a service platforms. So maybe you could just tell us a little bit about Solaris and relate that back to embedded finance and some of the trends that Philipp was just talking about.
Absolutely. Hi, everybody, from my side. Yeah, embedded finance, I can only resonate what Philipp already said. Obviously, one of the really dominating trends for financial services in the future, which, by the way, only relates to how we as consumers have learned to interact with our phones, right? Because over the last 10 years, 12 years since we use apps on phones, we learned that for every use case, there is an end-to-end solution on a phone. So now we're talking about whatever we want to do as consumers. We want to buy something, save money, and so on. And this is a process which today, in many cases, is kind of decoupled from what I actually want to do. So therefore, embedding the financial side of a process into whatever process we want to do is a very natural movement for us after we have learned to interact with apps on a daily basis. So now comes the point: any company which has an app out there or whatever service out there to consumers, typically not being a bank, want to embed the banking part, the services part of that. How are they going to do that? Becoming a bank, I can tell you, that's quite a big task. So better go with somebody who has a license and allows you to embed their services or their products into your process. That's what we call banking as a service. We are the provider who provides the infrastructure, the core functionalities, accounts, cards, and so on, lending, and the license, kind of most important element of that, for anybody who wants to embed financial services into their products. And that's kind of the really also big driver of innovation and transformation for the industry, because otherwise all those players out there wouldn't be able to do that because they're going for their own license, not an option typically.
And let's pick up on that a little bit and let's look into the future and consider the market opportunity. So Kunal, the question to you. So Bain Capital Ventures say that the embedded finance market will be worth more than $7 trillion in the next few years. Maybe you could just unpick that for us a little bit.
Yeah, so and if you think about the market, and I'll touch upon Philippe's second point, which is about customer centricity. And if you look at the market where the growth is actually happening, so it's happening in e-commerce is the maximum area of growth. So if you look at the growth area, e-commerce is supposed to about to grow at 17 to 20% per annum over the next decade or so. Next is healthcare. So things like, having point of sale financing or making the customer journey so seamless that the customer doesn't even realize that they are going through an act of making a payment. And my favorite example is I recently bought a bed for my son, and there was a website and it said something pay. And I just clicked on it. My address got fulfilled, my delivery preferences got fulfilled, and it was done. So e-commerce is the first area. The second is healthcare, especially with things like insurance, getting billing together. So those are the two main areas where we are seeing a lot of growth. And Ben, if I could just ask a question to both Philippe and Jörg, because I think you guys are seeing is, how are you seeing with the customers that you're working with? Is that the same focus, e-commerce or healthcare? Is there something else which is coming up?
So looking back into the history of Solaris Bank in the first years, and also still, we really see this niche neobank segment being very strong. And you can always argue that they're kind of putting more context around an account or a card offering than the classical banks were doing, right? Classically, universal banks serving a customer. Today, niche neobanks focusing on very specific niches. Then over the last maybe 2 years, we really see more and more like big tech and also e-com, but e-com is very much focused on the like buy now, pay later type opportunities. Like big tech is going a little bit broader, and big tech doesn't only need to mean Google and Samsung and so on, can also be a little bit lower, but integrate typically cards payments into flows, which is ongoing. And then if you look onto other industry verticals, it's really going through many verticals that people are considering now actively and reaching out to providers as us. How can we provide financial services into a context?
And Philipp, same question to you. So Bain, one of the preeminent consultancies around the world, you must be seeing some really interesting trends in the embedded finance space. Certainly the banks trying to get involved, and retailers and e-commerce in the way Kunal described as well. So what are some of the things that you're seeing?
I think what's very clear is that we see this cross-industry trend happening, and probably it's a bit region specific. So for example, in the Middle East, we see a lot of more across-industry cooperation. When we think about the e-commerce trend, it's very strong in some markets. For example, we've recently conducted a study for the UK market. And as you might know, buy now, pay later accounts for approximately 5% of the transaction volume. And what we've seen in 2020, maybe partially connected to the pandemic, there was an increase of 60 to 70%, which is astonishing. And of course, it's tied to the trend in e-commerce. And more broadly, there's also a big interest of our clients from the mobility sector. If we think about ride hailing, but also subscription-based services, value-added services around mobility in general, and some of the OEMs in auto finance reinventing themselves. So that is, I think, a very interesting area. And of course, the big players like Uber, what I read is that 70% of their driver payouts are already now conducted via instant pay. And in some of our clients, we also see a big pickup in terms of the app use. And the next step is, of course, to connect this to embedded finance in some shape or form. So I think there's really a lot. The final thing, the third trend that I see certainly is connected to the bank insurance part that was already mentioned. Many of the insurance companies also doubling down on embedded services, be it connected to utilities, smart home. And of course, all of these things just work fundamentally better when you connect them to some banking services. And all of these players are not very keen to do these things themselves. So they will rely on some form of partnership to make it happen.
And so that's an interesting one. So, obviously Solaris Bank can certainly play a role in that. So could a company like Mambu. So Kunal, to you, as this embedded finance world, explodes, where do you see a role for Mambu?
So Mambu is actually perfectly suited for embedded finance, because if you think about why Mambu is strong and why Mambu helps is we've got flexible APIs. So across different use cases, you can easily connect and configure your core. So a retailer could do it, a car manufacturer could do it. So the OEM example Philipp mentioned. So it's very easy to plug into the existing systems to do it. Second is we are a true SaaS platform. So because we have got a single code base, so as the velocity at which embedded finance is actually implemented becomes really fast. So as we start implementing use cases, it's ready to be deployed in one country to other countries. And the third is, which is really critical, and Philipp, that ties back to your first trend, which is data. You've got a real-time subledger. So you actually get the data feeds live. And I think if you combine the two pillars, which you said about having data, customer centricity, and the technological change, the critical backbone of it is, do you have data live as they're happening? So, I'll go a bit techie now, but, do you have an events-based architecture? So, what the customers are doing rather than, a standard if then and flow. So that's why I think Mambu could play a big role in the future.
And then, Philipp, a question to you with both Solaris and Mambu represented today. With the clients that you speak to, do they tend to be more open-minded about partnerships with, the fintechs to sort of move into this space, or is there still certainly the large clients, or is there still more of the persistent culture of build it yourself? How do you see those sorts of things changing, and what sort of advice do you tend to give larger clients?
I think by and large, the larger clients are committed to making partnerships work. And there are many examples where there are highly productive relationships. I think the change that we see happening is that many of the banks realize they need to take innovation closer to the core. So a few years back, many people talked about building digital attackers, which is still a viable strategy for certain situations and strategic objectives. But at the end of it, the highest impacts comes from really innovating in the core business. And for this to happen, there is some cultural change needed. You need to make some bold decisions in terms of maybe also questioning the way you've been running your existing core business. And that, I think, represents still the biggest challenge. But the innovation leaders, I think they are very much accelerating this. So if you think about BBVA, obviously quite prominently landing some high profile contracts in this space, shows that not all of them, but many of these banks are moving ahead fast. And also the same in my German home market, many of the larger players are actively developing their ecosystems. The question is, will they be fast enough in actually incorporating all of these capabilities into the core and make it seamlessly connect? And this interoperability is something that is really at the heart of embedded finance, as we mentioned in the beginning.
So let's pick up on that point, the notion of interoperability, and Jörg, let's come to you. So, Solaris Bank is, a banking as a services provider, so provides the capabilities as well as the license. So maybe you could talk about some of the insights you have, perhaps with working with some of the larger banks or retailers, on how you can help them, move into the journey, on that journey, and what you're seeing in the industry.
Maybe also to some extent as a reaction to what Philipp said, yes, the incumbents, the classical and large banks, they have the money, they still earn enough money to also invest into those things. And yes, we also see them definitely more open for partnerships. We're also talking to many banks by now, and that's something which, like, in our first years didn't happen, and by now suddenly banks are coming and talking to us. A little bit the challenge I see for classical banks is, yes, they need to do a lot on their infrastructure, which is money-wise they can afford it, but it's lengthy processes. The other element is that banking as a service is more than technology, right? There is also processes. There is typically outsourcing. There's risk management. There are so many things which you need to have under control, and which are so kind of different direction than your core business. So if you're your core is being a retail bank for whatever, and suddenly somebody says, yeah, now go banking as a service, your risk managers will go bust because it's a very different concept and it's very different processes and procedures and everything. And that is maybe even the bigger challenge for classical banks to transform their risk and compliance and controlling functions into understanding what banking as a service means. Plus, then in the first years, likely the business case for you as a classical bank with your billions of earnings might not be as big as the one. And then you're in the Kodak moment and think, okay, let's better go on doing the old thing. But that is what we can observe. But the fast ones, and then back to the partnering question, the fast ones, the very open ones are the ones who say, hey, why should we actually start renovating our core, which will be like 5-year endeavor? Why not work with somebody who is already out there, who has the systems, who has the processes? And then we can still, after whatever, 3, 5, 10 years, when we see it successful, transform onto our own license, onto our own balance sheet and so on. But start with something innovative, new, with partners who are already there and don't need to do the whole transformation into being banking and service provider.
And yeah, I'll just add one thing. It's about compliance. It's also about a fundamental shift in the business model. Because if that's one of my learnings moving to Mambu. If you're a bank, the business model is you're serving end customers or SMEs. But if you're a banking as a service entity, you're getting into B2B enterprise sales. So the way you run the organization, the way you do the business model is completely different. So, and I think, Philipp, I'll just echo your point and combine with what Jörg said. It's about a technological transformation. It's about a business model change. It's about a way you think about risk. So it's a big, tsunami kind of a transformation that needs to happen in order for banking.
And therefore, a very important point, the B2B mindset is a very different one than the typical, even if you say we're a business bank, but then you still talk about thousands and 100,000 of business customers. And then suddenly you're banking a service and you talk about whatever, a few dozen or a few hundred large partners which have very high expectations of your platform services, the quality and so on, which typically is a little bit different to having an end customer business. Yes.
Yeah, I think at the heart of it is really the concept of scalability. When you think about it, if you have this B2B business, you immediately come to the point where you ask yourself, how scalable is my platform? How robust? And I think there are many ways in which you can run a B2C business where scalability or your lack of scalability will come to haunt you, but it just takes longer to reach the surface. Yeah, so that's, I think, is the tricky part, that sooner or later, all of these elements that make you successful in banking as a service become also relevant, but it just takes longer for banks to realize, and that makes transformation a bit harder.
Jörg, a question to you. What are the attributes of the progressive and forward-thinking, clients and prospects that you're seeing in the industry who are looking to make this leap? And what are the attributes and characteristics of those that are less progressive and more conservative and wouldn't consider it? Is it the size of the organization, the history of the organization, the geographic footprint of the organization?
No, I think it's can't really put it into clusters there. And I mean, I've been a consultant before I started with Solaris Bank 5.5 years back, and I've been like in the early phase of when we started talking about like digital stuff in banking, like 2012, 13, and so on, where not really many things were moving because banks had kind of other concerns. But already then, it in the end is depending on individual people, and it is in very many cases depending on the CEOs or the top management if they believe in those shifts, and if they give the direction, we're going to do this now, and whatever the business case looks in the first year, because typically, as I said before, right, it might not be something where the business case of year one is incredibly positive. So if you don't have a mindset of going into a longer journey here and making something happen within 3, 5, or 10 years. And that in the end can only come from the top management. And they need to commit to their plans and to their revenues and to their earnings of the next quarters. So if it doesn't start there, it will never start. Then it doesn't matter. We see very old institutions, we see very classical institutions. But the combining factor is there's a top management player or team who believe in this.
So it's a people question. So we're starting to move into the how we move into the future. So let's go into the technology for a moment. And Philipp, a question to you. A big part, and you mentioned this just a moment ago, a big part of this is actually moving from your kind of legacy technology onto a new technology stack. Now, if your kind of core platform was built in the 50s and you operate in 20 countries or so, and you've got 50 instances of it, etc., that's a hard thing to do, right? It's a brave thing to do as well. And we've seen some instances where even smaller scale examples than the theoretical one I just gave have not been successful. So as an advisor to ambitious companies, how do you recommend that they embark on that migration journey from a technology standpoint? And then maybe we'll talk about the change management as well, the human side.
First one is to recognize that what we're aiming for is something that is more modular, more agile, and actually more adaptable to the customer needs. And when we know what our business objectives are, so are we focused on the customer interface? Are we focused on the data layer, on integration, on process efficiency? Depending on that, I think the answer will differ. For example, if you are facing a situation where you would just like to improve customer experience, there is a way to do this using abstraction, bolting something onto an existing system. The moment you want to go one step further and maybe innovate on the product side and also reap some of the benefits of truly cloud native technology, there are other ways to do it. And of course, you can go to a full scale core transformation, but this is something that very rarely is tackled with some of the larger players because they operate in many different markets. So what we increasingly see is that this question is specifically answered for certain sub-markets to achieve business impact quickly. And of course, the balance that you need to strike here is the agility that you may achieve with a solution that is more local, but at the same time, making sure you also reap the benefits of a consistent architecture that also scales. And so at the end of the day, there's probably no silver bullet, and you really have to look into the business challenges, your priorities, and the specific market that you're tackling. So obviously, attacking a niche market, say in Eastern Europe, you will have a different answer compared to how you may end up tackling one of the larger Western European markets. And that we see more as a portfolio of strategy of approaches that provides you with the kind of advantage that you need for the specific objective you have in that market.
Maybe if I may add also a little bit from our experience. I mean, we just did a core migration from the original kind of more legacy system we started using in the very beginning just to get live quickly into now a very modular set of systems for very different or very specific use cases. I think the one thing which doesn't make sense anymore in 2021 and going forward is trying to find the one solution which serves all your problems and have a big bang migration on one day to get solved. That's not going to happen, and the banks who still believe in that will end in disaster. That's what we are also seeing with banks with whom we're talking. They are all opening up towards really modular solutions where they take solution A here and a provider B there and a third system there and stick this together in a meaningful way for their specific use case. And very likely for most banks, there is no standard system. And for the ones which can work with a complete standard system, they might be not the flexible ones, which we need in the future, right? And I think both Mambu is also clearly an example for that, because you have a very modular system which you can stick into very different environments and can use in parallel on top, underneath other systems, and that's how it needs to work. APIs on all ends, kind of.
So Kunal, that's a good intro to the next question, actually. So Mambu, has a couple of hundred clients, and maybe half of those, give or take, have involved in migration in some shape or form. What are the 2 or 3 learnings that you could share with people today from that experience around migration?
I think the first one is the big bang. It's only if the lights are about to go off and you're hitting panic buttons and things are about, like, something is on fire. But where we have seen success with our clients is actually the question which starts from what do they want to achieve. So is it focused on new customer acquisition? So where you want to build a vehicle you either want to acquire customers from start, or you want to get into a channel such as embedded finance for customers. So, you create something new and you create the connectivity with your existing customers. So an example is when Itaú did Ank with us, they did an MVP in 13 days, went live in 3 months. The other extreme is if you're focused on product or higher share of revenue, and how can you actually bolt on Mambu as a product innovation layer? So you can keep your existing core, offer new products to your customers with flexible terms. So you can have flexible repayment terms. You can put on a buy now, pay later, and you can do it with existing customers as part of your current core. And we call it shared legacy. It's sort of a self-explaining term, but that's how our customers have been successful, because what's critical is time to market, because ultimately, banks are not making 20% return on equities anymore. They are looking at single digit, and 8% is a really good number. So quick time to market, ability to have the agility to test with customers becomes really important. And those are the two ways that we have been seeing our customers be successful when it comes to migrations.
The last question I'm going to ask you, and I'll ask you each in turn, but is as follows. What would you like to see the industry do next year? So Kunal, let me start with you. What would you like to see the banking industry do next year?
I think be more customer centric. And my example is, people go in queues to buy an iPhone. Nobody goes in queues to buy a new credit card. So how do you start demonstrating that you actually care about the customer? It's not about products and numbers anymore. So that's the one change I would love to see.
Be more customer centric. Philipp, what would you like to see the industry do next year?
I think to be bold to innovation outside of the core business, but also to have an eye on how to really make measurable improvements inside the core, and do this in parallel.
That's great. And Jörg, final question to you again. So what would you like the industry to do next year?
I would say think more about partnering and think less about building stuff by yourself.
More about partnering and less about yourself. Love it. Listen, folks, thanks very much indeed for joining us today on this Mambu chapter. And to all those that have been watching, hope you enjoyed it and enjoy the next chapter. Thanks very much, everyone.